Since you're young, you are told to study hard in school, that way you can get good grades and qualify for a good job. When you get that good job and a good salary, save a little bit of money. That way one day you'll be able to retire wealthy and be financially free. There's just a little problem. Study hard. Sounds great, except more than half of college graduates are unemployed or underemployed, meaning you got a degree in biology, but you're working at Chipotle 4 years after graduating college. Qualify for a good job. Sounds great, except our job market is changing faster than ever because of artificial intelligence, and most people only know how to use ChatGPT to write a better email. Save a little bit of money or a lot of bit of money. Sounds great, except today your savings are losing value because of inflation, because your banks are paying you less money in interest while inflation is still around. And then if you do these things, you're going to be able to retire wealthy and free. Well, I hate to break it to you, but America is facing its biggest retirement crisis that we've ever seen in history, because so many people are unprepared for retirement. They were hoping they could rely on Social Security, but the problem with that is Social Security is also drying up, creating an even bigger problem. The money game has changed, but most people are playing the game like it's still 1995. And that's why in this video, my goal is to show you why more Americans are becoming poorer despite us being the richest country in the world. And then I'm going to show you what you can do to escape the cycle and actually start building wealth in this exact same system. And at its core, if you keep doing what everybody else does, you're going to end up just like everybody else. I call this channel the minority mindset, not because it has anything to do with the way you look or your ethnicity or your skin color, but because if you keep doing what the majority of people do, you're going to end up like the majority of people. And statistically, the majority of people in America are working dead-end jobs that they do not enjoy. And statistically, the majority of people in America do not think that they will ever have a chance to be able to retire or see any sort of financial freedom. Yet at the same time, there are some people that understand the new rules of money, and they're becoming incredibly wealthy because they understand the game. And what that means in practicality is you can't keep using your money the way that people did 30 years ago and expect to build wealth the same way that people did then, because our economy has changed. And the first part that we've never been taught in school, unfortunately, is that you have to understand how to use your money in a way that's best for you, not best for making everybody else rich. Because the reality is there's a lot of entities out there that profit off of you being financially uneducated. Or if you want me to say it bluntly, there's a lot of people out there that profit off of you being financially stupid and off of you being financially poor. For example, banks profit when you are in debt. Why? Because when you stay in debt for the rest of your life, you're going to continue paying interest to the banker every time you get paid. You go to work to get paid, you pay the banker in interest, and they get rich when you go to work. Corporations profit when you go and spend all of your money. They don't care that you're spending money that you don't have. They don't care that you're spending money that you could be using to pay for your kids' college. They don't care that you're spending money that you could be using to pay for your retirement. They are hiring the smartest marketers and MBAs in the world to entice you to open up your wallet and spend money with them. In fact, the government profits when you are financially uneducated, because our economic system is designed to reward investors, not employees. Now, I'm telling you this as a licensed attorney who is not your attorney, but our tax code taxes you differently depending on how you earn your money. And what I mean by that is when you go to work and you get paid, you are generating what's called ordinary income. And this is from the federal income tax code. Yes, I am a weirdo and I keep the federal income tax code in my office. And look, it is more than 2,000 pages long and around 8-point font. It is not easy to understand because it is made complicated, so only some people can understand the way that this works. But when you go and you earn ordinary income from your job, your W-2 job, you're going to pay the highest tax rates and you qualify for the lowest tax breaks. When you become an investor, well, now you qualify for a different bucket of income. And now because you're a different bucket of income, you also qualify for lower tax rates and or bigger tax breaks. This is why you have so many investors around the world that can make millions of dollars and pay little to no money in taxes 100% legally, because the government is designed to profit off of you being an employee. Now, the funny thing about that is we're all taught to just go and work a job. Now, I'm not saying it's bad to work a job. That's not the purpose of this video. But you have to understand how you can build wealth, because the reality is for you to build wealth, you have to invest in your financial education. And unfortunately, This is the thing that we're never taught in school. But the reality is, if you want to build wealth, you have to have this financial education, because this is what's going to determine if you become wealthy or not. We're all taught about the importance of formal education, the importance of going to school and getting a good degree. But the reality is, your financial education is what's going to make you wealthy. Now you're going to say, well, Jaspreet, it's easy to say that because you're an attorney. Yes, I am a licensed attorney, but I've also never worked a day as an attorney, because I was able to build my investments. I was able to build my business while I was in law school. And before I started law school, I went to law school because I grew up in a traditional Indian house. And my parents, when I was growing up, said, Jaspreet, you have two options. You can either be a doctor or you can be a failure. You choose. And when I decided that I didn't want to be a doctor, my dad made a compromise. He said, Jaspreet, if you want to keep any pride in the family, you have to at least become an attorney. So I went to law school. I got my law degree. I did pretty good in law school. Passed the bar exam, got my license, never worked a day as an attorney, because once you understand this, you can start to use it to your advantage, because this exact same system is the same reason why some people can become incredibly wealthy. And this is the whole purpose, the mission of why I do this channel, is to help people understand this. I run a company full-time. My full-time job is running a company called Briefs Media. We're transitioning it to Briefs Finance, but that's my full-time job. This channel, Minority Mindset, is my hobby, because these are the things that I wish somebody would have told me when I was getting started on my investing journey, because the reality is, this system works for the people that understand how it works. And we're not taught how it works. Kind of a weird dynamic. But this is the reason why some people get very wealthy and the average person doesn't. The average person works very hard. And when I say average, this could be a doctor or a teacher or a truck driver. And you're gonna say, Jaspreet, how can you put them all in the same bucket? Because you have so many broke doctors, you have so many broke truck drivers. You have some really rich truck drivers, you also have some rich doctors. But at the end of the day, if you're just working a job and spending your money, whether you make $20,000 a year or $250,000 a year, and yes, I know some truck drivers make a lot of money, but it doesn't matter. If you spend all the money you make, you're going to be broke, period. And you see this happen all the time. And if you want to benefit from this system, that means you have to understand how the system works. And our economic system is designed to make one person rich. Do you want to know who that is? It is the investor. How do I know that? Well, let me show you. Now, I do want to let you know, before I go too deep into that, that if you are an investor or want to become an investor, I did put together a full investing masterclass where I walk you through how you can get started as an investor and find hidden investment opportunities before everybody else. And I'll also show you the full investing framework that my firm and I use to research investment opportunities and find them before they hit the headlines. It's a completely free masterclass. There's a ton of value in there. And when you register for the masterclass, you're also going to get access to Market Briefs, which is my newsletter for investors, for free. So if you want to get the Investing Masterclass and Market Briefs all for free, all you have to do is register by clicking the link down in the description below. There are 3 rules of money that you need to understand. Rule number 1 is that money flows to the investor. Now, when I say money flows to the investor, what that means is when you spend money, the person that benefits is the investor, the owner of that business. So let me diagram this, because there are 3 entities in our economic system. There are consumers, there's the business, and then there's the investors. Every single person, you, me, and everybody else, is a consumer. Doesn't matter if you're rich or poor, because everybody has to eat. Everybody needs a car, everybody needs clothes. So when you go to Chipotle and you buy the bowl, you are spending money at the business. If you buy the extra guac, the business makes more money, but the real person that benefits is not the worker in the business. I mean, yeah, you get a salary, but the excess dollars, the big bucks, go to the hands of the owners of the business. And when I say owners of the business, in this economic system, that means the investors in the business, the I class. So in this system, money is designed to flow to the investor. Rule number 2 is that inflation benefits the investor. When inflation happens, that means you have to walk into Chipotle and pay extra money for the guac and extra money for the bowl. So what does that mean? That means you as a consumer are going to spend more dollars into the hands of that business. Now, when this inflation happens, who is going to win? Well, what we've seen is that wages have gone up since 2020, the big inflation that we've seen over the last 5 years, but wages haven't gone up to keep up with inflation. So if businesses are charging this much more money, but employees are making this much more money, who is getting those excess dollars? Well, if you guessed the investor, you are right. those excess dollars go into the hands of the investors' pockets because inflation benefits the investor. And by the way, inflation didn't start during 2020 pandemic. It has been happening for decades. So when inflation happens, it's the investors that get rich because the excess dollars go into the hands of the owners who are the investors. And rule number 3 is that our tax code is designed to benefit the investor. Now, I've already kind of hinted at this, but the tax code incentivizes you to become an investor because they reward you with lower taxes. Some people say it a different way. Some people say that the tax code punishes you for being an employee. But what I want you to understand is not that it's bad to be an employee. I've said that multiple times now. It is bad to just be a dumb, stupid employee that spends all their money. And that's whether you're an employee, a business owner, an athlete, an executive, I don't care. And I say this harshly because I want you to understand I don't make these videos to make friends. I make these videos to help you be better with money because the reality is if you make money and spend all of your money, you are making these people rich. But if you make money and use it smartly, then you can make yourself rich. Now you're gonna say, well, Jaspreet, what does that mean? Let me show you. Everybody in America needs to be a business owner, period. Now catch what I said carefully. I didn't say you need to start a business. I didn't say you need to operate a business. And I didn't say you needed to work in a business. You need to be a business owner. And the way you can be a business owner is either by building a business or by buying the business. Now it is extremely hard to build a business. I love entrepreneurship. I love entrepreneurs. If that's what you want to do, great. But it's not for most people. Most people should not be in the business of trying to start a company or trying to run a company. It's just a lot of work, a lot of risk. Most businesses will fail. But every single person should own a business that you can buy. Now, you don't have to go out and buy an entire company. You can buy a piece of a company. If you're spending money at Amazon, you can buy a share of Amazon, one piece of Amazon. If you're spending money on Nike shoes, you can own a piece of the Nike corporation. If you're spending money at Apple, you can own a piece of the Apple company, because if you buy one share of those companies, you become one of the owners in those companies and you get to share in their profits. So when other people are spending money on Nike and Amazon and Apple, you are the one that's making money, because now you own a piece of the profits. A share is one piece of ownership in the company. The more shares you own, the bigger piece of ownership you own in the company. And before, you used to need hundreds, if not thousands of dollars to get started as an investor. Today, you can get started with $10, even $1. But you have to know how to allocate your money. And this is where you need a simple rule of thumb on how do you actually do that. And one of the simplest things that you can do is follow something like a 75-15-10 plan, which means now you're getting paid, and I don't care how you get paid, if it's from your job or your business, doesn't matter. You get paid and money hits your bank account. You only want to spend no more than 75 cents of every dollar that you earn. So you want to create an automatic withdrawal and deposit out of that bank account into 2 other bank accounts, which means, yes, you need 3 different bank accounts. And follow me when I say this, because you do want separate bank accounts. So 75 cents of every dollar that you earn stays here. 15 cents goes here into bank account number 2, which is holding your investing money. And then 10 cents of every dollar that you earn is going to go here into your account that's holding your savings money. Now what you're doing is you're playing the game like a wealthy person, because what every wealthy person does is they save and they invest their money before they spend all their money. What every broke person does is they make money and they spend their money, and then they save and invest if there's any money left over. And surprise, surprise, there's little to no money left over month after month after month. So every time you say, I'll wait until next month, I'll wait until next year, it never ends up happening. This is why you need to have a system. And the reason why I say create 3 different bank accounts is so number 1, you can automate the transfers into these different bank accounts. And so number 2, so you don't accidentally spend your investing money or your savings money. Do you know why the government takes your taxes out before you actually see that money? Like when you get your paycheck, you might have seen that your payroll taxes are taken out and your FICA taxes are taken out before you actually get that money. It's because the government knows that if that money hits your bank account, you're probably going to spend it. And then if you had to pay taxes at the end of the year, you would have no money to give to the government. And so they don't trust you. And you don't want to trust yourself with that same thing either, because when you have all your money sitting in one bank account, how do you know how much money is actually supposed to be invested or saved? And when you have all that money in one bank account, it's very easy to accidentally spend it when that sale happens on the new TV. So you want to create a wall between your spending money, your savings money, and your investing money. And then you want to automate it. That way you don't actually see the money here. It goes into these bank accounts before you have to worry about it. And if you're wondering, well, Jasprit, how am I supposed to afford living off of 3/4 of every dollar that I earn? I want you to think of it like a tax. Because if the government were to raise your taxes by 25%, what would you do? You'd complain and cry and scream and kick and be really upset and angry, but then you'd find a way to pay it, because if you don't, you're going to go to jail. So think of this like a tax. But now you're not making the government richer, you're making yourself richer, because these investments are how you actually become wealthy. These savings are there to protect you against an emergency. I talked about this in the beginning part of this video, that savings are losing value to inflation. Well, that doesn't mean you shouldn't save any money. It means you have to save money strategically. Save money for an emergency. Save money for a big purchase like a house or a car. Save money for a vacation or a Rolex. Or save money to make an investment. So your savings are here. Your separate emergency savings are here. Your investment money is here. This is how you're going to become wealthy. This is what you spend on your car and your house. Now you're going to say, well, Jasprit, where do I invest my money? And this is where people get caught up in the game of trying to find the perfect investment. Should I invest in stocks or real estate? If I invest in stocks, should I invest in Nvidia or Tesla or Amazon? Should I be investing in ETFs or mutual funds? Or should I be investing in index funds? And what is the cadence that I should buy? And people start to get really intimidated by this idea of investing, and then they get scared and they get turned off, and then they start making bad decisions because you start finding these get-rich-quick schemes. But the reality is, investing your money and building wealth is kind of like getting in shape. You can get caught up in the whole rabbit hole of, what should I eat? Should I go carnivore? Should I go vegan? Should I go into this paleo diet? Should I be doing high intensity workouts, low intensity workouts? Should I be doing weight training? Should I be doing cardio? At the end of the day, what you should be doing is just getting on the treadmill and putting down the donuts and ho-hos. Once you get on the treadmill, then maybe you pick up 10 pounds and you start doing something with it. Once you start doing that, maybe you say, what is the bench press? Once you start doing that, maybe you start to try different types of exercises, and now you start to get smarter and do more after you get started. It's the same thing with investing. The reason why so many people don't become wealthy isn't because they made a bad investment, it's because they don't start. Just get started and then start researching. And don't go into your investments in desperation, because what happens to a lot of people is they get into a situation where they are desperate. I am struggling with money. I don't have money to pay my bills. I need passive income. And then that desperation leads to you making stupid decisions. You start buying these classes of people showing you how you can make $10,000 a month without doing anything, sitting on a beach. And that's where now you are paying for somebody else's lifestyle, but you're the one that stays stuck in that situation because you want and crave that way out. And unfortunately, there's no sacrificing the sacrifice. It is hard, especially in the beginning, but it does get easier. There is a path out if you stay consistent. I call it a decade of sacrifice. That is a decade of spending less and earning more to invest your money like crazy. And if you stick with that, you can become wealthy. You can have a completely different life financially if you are willing to stick with it. And most people are not willing to do that. Most people want the easy returns today. We want the microwave culture, that I put it in the microwave for 2 minutes, now I got a hot, nice meal. Well, there's problems when you try to do things very quickly. And you have to go through the process. And yes, there are ways to make it faster. I mean, you can work to now invest more money by earning more money. If you can earn more money, you have more money to invest. You can live smaller. You can learn to invest in your investing research. You can try to get better returns with your investments. That way you can grow your wealth faster, but you have to get started. And that's the process, because most people in America today, statistically, most Americans are spending more money on their Netflix subscription than they are on their investments, period. Why? Because more than 70% of America has Netflix, and more than half of America is going to contribute $0 to their investments in 2025. That's a problem. In order to fix that problem, you have to understand how you are keeping yourself stuck. Now, we can blame everybody else all day and night long. We can blame banks and corporations and the government, but once you understand this, you can learn how to use all of this to your advantage. I mean, you can start to use banks to your advantage. Why? Because you can use a high-yield savings account to actually earn some interest on your savings. Maybe, and this is much more risky, don't say that you need to do this, maybe you take a loan from a bank to go out and invest in a business, or to invest in real estate that's producing you income that's going to make you more money. Corporations make money when you spend money. Well, guess what? You can invest in those same corporations. That way now you can start to profit by owning the corporation instead of just making the corporation rich. Governments profit when you just spend your money like a dumb employee. Well, guess what? You can use the government to pay less money in taxes because that's what the tax code says. Again, I'm not saying it's a bad thing to an employee. Most people should be. I mean, I don't know why some people are vilifying it. It's a way for you to create an income, and ideally you can find a good job. But then once you earn the income, I need you to use the income to build wealth by investing that money, because I don't care if you make it $20,000, $200,000, or $2 million a year. If you stop working, you stop getting paid. And the way that you can bypass that is to use your money and invest it into assets. And now when you're investing this money into assets, now you can start building wealth that way. Now, if you stop working and money stops coming in here, your investments can keep paying you. That's the way that you build wealth. And the reality is our economy is changing. Our money is changing. We've been seeing inflation, and more people are getting concerned about the dollar because of all the government spending that's going on. We've been seeing changes in the job market because of artificial intelligence and all the money that's going into artificial intelligence. There's constantly concerns about the economy being overheated and inflation because of interest rates. All of these are changes that are making markets more volatile, that cause most people to panic. But that also creates opportunity for the financially savvy when you understand that the person that benefits from all these changes are investors. And when you see the next downturn, that creates opportunity for the smart investors to buy good investments at a discounted price. When markets crash, smart investors get rich. When recessions happen, smart investors get rich. What do I mean? In 2022, when markets crashed by 20%, some investors came in and bought good investments at a discounted price. In 2020, when the pandemic hit and the stock market fell at the fastest rate since the Great Depression, some investors got rich because they bought great investments at a discounted price. In 2008, when the housing market crashed, some investors got rich because they used that as an opportunity to buy investments at a discounted price. In 2000, when the dot-com bubble happened and dot-com companies fell by 78%, some investors saw it as an opportunity to buy good investments at a discounted price. This system, we're not taught this, but this system is designed to benefit investors. You can learn how to be an investor. And if you can learn how to be an investor, you can accelerate your wealth and actually build wealth in this economic system, because the reality is it costs money to eat and it costs money to feed other people. I'm not saying go out and become this money-hungry person, but become financially educated so you can become wealthy yourself. That way you can take better care of yourself, you can take better care of your community, you can take better care of your family, and you can help feed other hungry people. But it requires you to be able to feed yourself first. And you have to understand how the system works in order for you to do any of that. That's why this financial education is so important. So this economy is changing, and it's changing fast. You cannot win in this economy by doing the same things that worked in the 90s or doing the same things that worked in the 70s. It is time for you to understand this shift, because this shift is accelerating. And the way that you win in the system is by becoming an investor, and is more important than ever before. And you need to have some sort of rule of thumb on how do you use your money. That way you can actually become wealthy. If you want some additional resources on how you get started as an investor and find investment opportunities, again, I have my investing masterclass for you down in the description. And if you got value out of this video, the best thank you is a referral. So if you don't mind, please share this video with a friend, a family member, a colleague, or a fellow investor. That way we can continue to spread the word. Thank you. The United States government owes more than $37 trillion. That means your tax dollars are being used to pay interest on all that debt. And this is where President Trump has been proposing a new plan to help pay off this debt, involving gold